Well, currently the growth in premium is coming from, you can call it the emerging markets or from the growth markets. So South America, South Africa, Sub-Sahara, Asia, China, even to a degree Australia. So I think that's, and Middle East. So that's where it's going. Is it sustainable? Hopefully. But the mature markets also have growth opportunities. As the economies start to pick up, there should be opportunities for insurance. And with new products and releasing such as cyber, reputational risk insurance, contingent, non-damage, contingent BI coverage, etc., we should be able to be sustainable, yes. Hard market around the corner. Well, I would love one more hard market, but I don't think so. I think what we see here today is the new norm. I think you'll see certain lines of business hardening a bit. So take marine as an example, it continues to lose money, property loses money, so we see some rate movement, deductible movement, but there is still in the industry, it's overcapitalized, it's oversupplied with capacity. Even though investment income is low, you really would think that there would be a change in rates, but there isn't. So I would say what we see is what we get. And if you look at companies' results, they're still very profitable. Their combined ratios are in the 90s. I did do a meeting earlier this year, and I disclosed the numbers of the 5 big carriers before reserve releases. And it was quite amazing that none of us, including AGCS, we all moved into the hundreds. So we've been living off of our good policies of reserving for the future. And the real question that I have for myself and the industry is, how long is that sustainable? That's a tricky question. I would say we should invest in both. Technology, when considering, I've been in the business 30 plus years, and when I look back, I used to have telexes, faxes that would conveniently disappear, so as an underwriter that's not a bad thing. If they find the file many years later and there's a loss, there's no information or who did it. So from technology, I'd like to see us in the next 5 years have it so that clients have online access to their global programs, can look at their claims, their loss history, their engineering reports, so basically data that today is done via computers, sending them hard copies, and I'd like to see that online. So from technology, that's important. And then in investment in people, I mean, people, it's a people business, and our people are the most important asset we have. So I'm a big proactive person on hiring people, training people. In our company, we have talent development programs. We hire graduates every year, run them through programs, and we have each employee has a development plan. So I would say it's critical for the future. It's a people business, and take this event here, ARMIC, it's all about people meeting with people. So it's really, that's what it's about. Well, that's a tough one. I think the industry has changed. Obviously, regulatory-wise, companies are it's much more stringent. Banks are much more stringent on requirements. But I think if you look back, what caused the Lehman's collapse and how it transpired, all those are now out of the equation. So you can't buy a house today anymore without a reasonable down payment. The banks are not going to give you the money. So it's much more stringent than it used to be. So I don't think you'll see a repeat in that area. I think that's behind us. And even if you look at some of the insurance companies that were affected by that whole fallout, Lehman's and it was AIG, ING, many of the companies, banks, they're all recovering. So I would say that the controls and checks and balances are in place today that weren't there before. Yeah, that's not an easy one. I think being German-owned company, obviously we're affected by the euro. So in some cases, it helps you. So this year, we lose out when we convert on the gross premium written, but on the expense side, it works the other way, so you get a credit. So I think that balances out. I think the long haul, the euro will be fine. It will come back. I just hope it hurries up because I'm losing money on the exchange rate every month, so coming from North America. So, but I think it does have an impact on business. It has an impact on insureds. It has on how much they want to spend on insurance premiums, what limits they want to buy. It has an impact on manufacturing, so they become uncompetitive or they become more competitive. It's a win-win sometimes and a lose-lose or a win-lose. It depends on who you are and what you do. If you look at Germany as a whole, their manufacturing is up. As the euro falls, their product becomes more better to buy for other countries and cheaper. So their export goes up. Whereas UK is affected with the pound the same way. Then you have the US that's devalued its currency to a degree. I don't want to say the word devalued, but it has let its currency fall. I'll give you an example. When I went to move to the United States from from Canada in 2006, 75 cents American got you a Canadian dollar. 6 years later, $1.05 American got you a Canadian dollar. So it moved that much in 6 years. And it's been right around par. So it has affected the North American economy. So I think when you look at it globally, the euro is tied in globally, is what I'm trying to say. It's not just the euro standing by itself. You've got the euro, you've got the US dollar, you've got the yen, you've got the Chinese currency, all of that's factoring in. But I think, you know, the euro has the worst behind it. I mean, it has some hiccups with some of the countries, but I think it's starting to recover slowly.